Hello guys, it's Make It Big Online YouTube channel. I want to welcome you all to this channel. Um, Recently I posted a video where I gave you a strategy that you can use to catch spikes as well as to scalp following the ticks. So I've been seeing your comments and I've noticed how you people are responding to these strategies that I give. I want to appreciate you so much for your participation and joining my YouTube community. Today this video is specially for those who have small accounts. Uh, I'm not giving you a strategy today, but I want to tell you what you can do to keep your account alive because if you are following the ticks, a single spike, for instance, you can see this is following the tick. Let's say I enter the market around here, okay, and let me say around here, and I'm trying to follow the tick upward. So because this is crash, which means it falls downward. So if I'm trying to follow the tick upward like this, then at this point you can notice something, that uh, at this point, remember this is my entry point and I follow the tick. Let me say up to this point, and maybe I was just hoping that this thing will climb up to somewhere here, maybe climb up to this point, so that I will just take my profit. But unfortunately, you discover that from here there was a spike down, just like what has happened right now. I should be on profit now. I'm going to just take this first one out. Okay, I'll wait for the second one to spike. Now, you now notice that while you were waiting for the thing to get to maybe here, uh, it spiked against you right here, and while you were waiting for it to return, it spiked again. So now you can see there I have another spike right there. Now if I go to the 1 minute time frame, you see the long spike, and this is still going to spike again. It's going to just go like this and then another downward move. So now this is 15 minutes. So let me say someone saw this. Like if you notice, when I opened this video, when I started this video, you can discover that the thing was moving with such great momentum upward, and you might be tempted to trade, hoping that especially for the beginners who have not understood price action that effectively, now you saw the trade around here, and seeing it around here moving with so much force, you assumed that this market will still go up. Now, upon entering the market here, it counted some profit for you, which because of the momentum it was going, you just left it that yes, this will still go, and now suddenly there was a spike against you. Now this spike can give you some losses. This is crash 1000. So from here to here, this spike that occurred can give you, let's say, $2 loss. Okay, uh, let's say $2. So which means you now have a loss of $2, right? So looking for that drawing pen, can't find it here. Okay, so let's say you have $2 loss. It's not what I'm looking for. I'm sorry guys, trying to look for something I will use to draw for you, but it's not, looks like I can't find it anywhere. However, let me explain. So this spike gave you a $2 loss, and probably your account is just $10 account. You have a $10 account, okay? So okay, this I need this. Okay. Now you have a $10 account, right? Now inside that $10, you will agree with me that $2 is already out. So because $2 is out, now you have $2 loss already, and your account is 10. Okay, let me change the color so that you can see what I'm doing effectively. Okay, great. So now this spike gave you -2, and your account is 10 in total. You made a deposit of $10, and now $2, a single spike has reduced your equity now to 8, right? So you now have 8 as your equity, while having $2 as a loss. Now you might want to be patient for this market to kind of return upward for you, like you want the market to return to your entry point. Remember, where I placed this arrow is our entry point. So that red line you see there is our entry point. So now you are waiting for the market to get to that point. Well, unfortunately, most times uh, for this particular market, I can assure you that will not happen. So the market is going to crash down again. Now when this happens, you now incur loss, let's say -5. So -5, which makes your equity to now become 5. So your account is dying gradually. Under your nose, your account is going. This is because you are not applying proper risk management. I know that the strategy, like most of you have said in the comment section, is working very powerfully and effectively. I want to also let you know that in the forex market, there is no 100% win trade. Okay, even though the strategy is working very smoothly, a time will come where the strategy will seem not to work. This is why we post different strategy in the channel, so that a time where one strategy is failing you, you can dive into another and use, because I can assure you the strategy will not give you 100% result at all times. There are times that the market will deliberately not favor that particular strategy. You have to use another. So that's why I'm bringing this video, so that you know what to do. So right now, in order for you to stop blowing accounts, this is what you do. When you want to place your trade, you see what I was telling you. This trade is not going up, it's going to crash down. And imagine if you were still hoping that it will get here to your entry point here, and now there is a spike. So by now you should be incurring up to $5 loss. So I'm just going to close the trade. I should be incurring up to $5 loss. So now, how do you prevent this thing such that even if there is a spike, you should still your heart should not be troubled? Well, if I say set take profit, that would be one. If you want to be setting take profit and stop loss, then you have to ensure that you are cashing only spikes, because if you are not cashing spikes, your stop loss will not be respected. So this is what I mean. First, this is my entry point. When I'm entering this market, first I want to consider my equity is just $10, right? My equity is $10. Okay, so now I want to enter this trade right here, but I also know that since I'm trading against the spikes, meaning I'm following the tick instead of selling for crash, I want to buy. There is every tendency that there might be a spike against me. Even if the trend is an upward trend, there will definitely be a spike before it will finally follow the trend. So what do I do from there? What I do is I'll say, okay, in that case, I'm going to place a trade right now to show you what I mean by that. I'm going to use a lot size smaller than the actual lot size. For instance, if you want to trade crash 1000, like boom 1000, the least lot size for this is 0.2. Okay, that applies to this, applies to this, applies to this. Okay, so exception of these two. All right, this boom 300 and crash 300. For boom 300, the minimum lot size is 0.1. Okay, you use 0.1 for boom 300, while the minimum lot size for crash 300 is 0.05. Okay, that's the minimum lot size you can use for crash 300, 0.05. This one is actually the most volatile among them all. Okay, so we have 0.05 for this one is 0.1. You can use 0.1 as the minimum lot size, while every other one here, the minimum lot size is 0.2, 0.2. Okay, so now I know that if I use 0.2 to trade, a single spike can become -2 immediately. So what do I want to do? I want to use a lot size smaller than the actual smallest lot size. So in that respect, what I will do is this. Okay, I'm going to place a trade now. So I'm going to just place a trade here, click this point. So when I click on it, now it's going to bring me here. The minimum lot size, like I told you, 0.2 for crash 1000 and so forth. So what I want to do is I want to use a lot size smaller than this. So I want to use maybe 0.25, so that we use 0.005, or I can say 1. Okay, so or 2 or 5. Okay, so let me say 2. It's 0.022, 0.22, right? Then I'm just going to place my buy because I want to follow the tick. That's why I'm doing this. So because I want to follow the tick, that's why I'm using the small lot size. So I'll click buy. Okay, so now don't forget, a spike against me is a disaster and I want to avoid it. So because I'm going this direction, so what I'll do is what is called partial close. I'll come over here, I'll click and click this point to close the market. Then instead of closing everything, I'm going to reduce this to 20 and just click close. Now you need to understand that this value here must be the minimum lot size, else everything is going to be closed. So I'll just click close. So when I do that, you now see that my lot size here is 0.02. Okay, now I know this. Okay, now there is a long spike against me. As you can see, this is a perfect time because of the example. Now remember, I entered the buy because I was expecting it to go down, but I told you this is going to spike against us, but I want to avoid it. So now I have a spike against me, but remember I'm using 0.002. So if I come over here, you see that even the long spike is just 10 cents against me. So I can decide to actually close this trade and also leave it overnight because the trade is actually going to return. Okay, so I can trade overnight by leaving it for it to return, or I'll just close it. After all, it's minor. You see what I'm trying to say. Now imagine if this was 2, because then this single spike would have been about 1 point something, about 1.5 or $2 against us, but right now we are just having cents. Now another disadvantage of that is that when you are following it upward, it's going to, maybe from this point of entry to somewhere here, will not give you more than even 10 cents as well. Yes, it won't give you maybe more than, no, it's going to be more than because of this distance. So let's say 50 cents. Okay, from here to here will give you 50 cents. Now for a small account, When you have 50 cents per trade, that's kind of profitable. The next thing you want to do is to look for another trade, have another 50 cents, that's $1. Okay, and if you accurately target the spike, then you can use the minimum loss and get it and get a single spike, sometimes $2, $3, and so on. Now the reason why I recommend this is because if you keep losing money in the forex market, soon you are going to get discouraged. So there need to be a system by which you protect your capital. Okay, then if you are following the tick, I will advise that you apply proper risk management, because without risk management, you might blow off your account, and if you blow off your account too often, you will be discouraged. So before I continue with this video, I want to let you know that if you are new watching me this video right now, please don't forget to subscribe, share with your friends and your loved ones, and share your thoughts on the comment section. We will do well to reach you as soon as possible. Okay, and if you have an account you want us to trade for you, then based on profit share, of course, go ahead and reach out to us through any of the channels that is in the description box. If you don't have a trading account with Derive, which is the broker that supports this boom and crash, use the link in the description box to also get a free account. Fund it with as low as $10, and you can grow that money. The video that is coming next is how you can actually grow a $10 account into $100 in a week, not in a day, because it's not magic, but in a week. I'm going to show you how you can consistently build it up, and in 1 week time you can get it up to $100. Okay, so subscribe, comment, like, and share. Thank you very much for your support. So, and there is a very big uh, strategy that can give you 99% win rate that I have reserved to share when this channel gets to 1,000 subscribers. So please, you do well to help us get to 1,000 subscribers, and I'm going to share that strategy with us, as well as also there's a task that is also coming up that I'm intending of doing daily live trading session on this channel. What I mean is, I come online, I'll will begin to trade together. While I'm trading, right as it is right now, you can see I'm going to be doing such, but it's going to be live. I'll be streaming it, so I'll be giving you the analysis of why I'm placing the trade. I'm not just going to tell you, okay, it's time to sell or time to buy. No, I'll give you the conditions, like, okay, the reason why I bought or why I sold is because of this, because of this, because of this. And I'm going to also be answering questions. I'm also going to be uh, I'm also going to be teaching you on live session. Okay, so all this will be done when we get to 1,000 subscribers. So please do well to support us so that we can grow fast. Thank you very much. Okay, so back to the video. So now, money management is one vital tool key in forex trade. So you need to understand that, and that is why I brought this video, because most of the video you will see online will tell you that when the strategy is ripe, get about 5 candles. So let's go to 1 minute, and let's say, okay, there is a strategy that tells us to follow the tick and get 5 candles, maybe 5 ticks, and get out of the market. Now the sad thing is, if probably the strategy gives you a buy signal here at this point and asks you to buy, now you are going to buy, and if you can, this is 4, and the fifth one is this spike. And most times these videos will tell you to use a outrageous lot size. Maybe in an account of $10, you are using one standard lot size for crash, hoping that because one lot size will give you 50 cents, now hoping that when you get 5, that's $2.5. Okay, in as much as this is very profitable, what you are not putting into consideration is that there is possibility for spike. That doesn't mean the strategy is not working, but like I said earlier, every strategy does not work 100% all the time, because market does not respect you always. Market does what is in its mind, and you need to just be prepared for that. So now, if there's this long, just this spike, just this one against you, and you are using one standard lot size, this spike alone will give you about -7 in your account, and your margin level will be low. Now you have 3 equity. Now you will be praying for this trade to come back to your entry point, and if that does not happen, then any little spike again, you have blown your $10 account. If you repeat this over a period of time, you are going to give up on the trading markets. So that's why I decided to bring this video. Trade with caution, apply risk management and money management, so that you will not weep at the end of the day. Okay, all right. Then I also want to talk about your trading habit. When trading, you need to know that trades, that's why if you are afraid for the trade you have placed, it means that you do not follow proper risk management. I'm going to make a special video for that, so you can turn on your notification, so that you'll be notified when I upload that video. I'm going to be showing you some of the things you can do to avoid entering wrong trades, and some of the things that you can do to make your heart to be at peace even when you enter a wrong trade, because sometimes our emotions can rise, and you are young, you don't need to give yourself BP over trade. So I'm going to make a video for that. If you find this video helpful, please don't forget to give a like and a comment on the section box, and don't forget what we have learned. Most importantly, if you are going to follow this tick, make sure that if your account equity is small, $10, $20, $30, 40, 50, if your account is less than 100, if your account is less than 100, believe me, you need to apply what I just showed you. Okay, you might not go as low as this 0.02, but you can use 0.05. I recommend this. If your account is less than, or you can also use 0.1 for this one. If your account is less than $100, like you can see this account right here. This account was about 70 something. I entered into some funny trades, and I incurred some losses, which I'm trying to recover. Okay, so now these losses are minimal because of the fact that I used a minimum lot, a very minute lot size, and it was this one that I actually entered that incurred all the huge loss. Now imagine if I didn't use a small lot size, I just entered, and that happened. Probably I would have reduced this account to maybe $20 or so. So you have to be cautious of what you do. Okay, don't be greedy. Trading success is not overnight, it's a step-by-step growth. Okay, it's not something that, it's not an upthrust. No, it's something that you grow over time, not one overnight. So let's say you make, for a $10 account, let's say you make $2 a day, because you per trade you were having 50 cents, and you were able to have 4 trades. So 4 trades gave you $2 for that day, and you decided to close. Okay, the next day you had another $2. That's 4 already. Okay, so in a week, 2 times 7, because 7 days a week, in a whole week you are going to have $14. You might look at it that this is small, but remember you started with $10. So which means in a week you have made your capital and $4 profit extra. So your account equity is going to be $20, 24, beg your pardon. So it's going to be 24. And in the next week, just because your account equity has grown doesn't mean you should change your trading pattern. No. Remember I said if your equity is less than 100, so 24 is still less than 100. So what you do is you apply it again. So you made another two. So for the second week, another $14. So 14 plus 24, this is going to give us 38. So now you have 38 in 2 weeks, something you started with 10. It might look small, but you are growing. Okay, it's better than making $14 one day and losing $20 the next day. You get me? So if you are getting $2 per day for a $10 account, it's growth. And over time, you will discover that you have grown that money to what you can use a better lot size to trade. Okay, so this video is getting too long. Like I said, I'm going to make a special video for you, a step-by-step guide. And when we get to 1,000 subscribers, like as I've promised, I'm going to be doing live trading session where we'll be placing trades. I'll tell you, okay, this is why I'm placing this trade. This is where to set your take profit, here to set your stop loss, and all that. Then I'll also be doing some live session of training, teaching you the basics of the market, how you can read price action and all that, and so on. Okay, so till I post the next video, I'll see you. Thank you for your support. I actually have a video that I'm bringing that you can use to trade all these synthetic indices, these volatilities. Okay, all these volatilities. We are not restricted to only boom and crash. We can trade all these step index and all this. I have a strategy that I'm working on. I've already tested it. I've back tested it with I back tested it with 100 trades, and they get nine inside 100 strategy 165 and 35 loss. So you may think that's not profitable, but there's what we call risk to reward. I will explain everything in the next video. Okay, I will explain everything to you, show you the strategy. So that strategy actually with these 65 trades I was able to make $650, and with the 35 trades I lost 175. Okay, so imagine 35 trades you are losing this, and 65 trades you are gaining this. If you subtract, you are still on profit. That's what I mean by risk management, and everything I'm going to show you in the next video. So don't forget to subscribe, forget to turn off your notification bell, don't forget to like and comment as well. You can join our Telegram channel. The link will be in the description box. If you want to learn a one-on-one training on the forex, of course a link to buying the course, a link to paying for a one-on-one training will be in the description box. And if you don't yet have a Derive account, of course do so by using the link below. You can also reach me on WhatsApp through the number that is displayed on your in the description box. All right, till I see you again, thank you very much. I'm just going to close this trade because I'm done for the day. All right.